Welcome back to the special edition of Fast Money. As we mark our 15 years on air, take a look back at one of our first ever guests, my first ever guest, when I took over the show 13 years ago. Legendary investor Carl Icahn, chairman of Icahn Enterprises. This was the two of us back in 2009. We actually extended the set so that he could sit there with us. It was called the sidecar, I think. He's back with us now exclusively to help us celebrate. He joins us on the Fast Line. Welcome back to Fast Money, Carl. It is great to have you.
Good to be here, Melissa.
Want to first get your take on...
Congratulations on your anniversary.
Thanks very much, Carl. It wouldn't be a party without you. Want to get your overall take on where we are in the markets. You said in the past that you think we're headed for massive trouble in this country and the economy, and I'm wondering if the Fed, in your view, can do anything to avert that massive trouble. I mean, it is on the road to tightening at this point.
Yeah, I don't believe that there's necessarily massive trouble coming soon, because I don't think anybody can really know when it's coming. But with all the factors, you don't have to really be a genius to understand that if you keep pushing money into the economy the way we've been doing with the money velocity today and the balance sheet, that you're going to have inflation. I mean, it suddenly comes as a surprise. I'm surprised it hasn't happened sooner. But I do think that the way it's going, there's going to be problems with inflation and a number of other things. But I certainly don't let it, bother my investment philosophies of activism, and I just keep going. But I think and we keep a pretty big hedge on.
Right.
But eventually, who knows? I think it's going to be a little tough. It could be now, and it could be 3 years from now, but it's going to happen.
We're focused on inflation, in the prices that we pay for various things, Carl. But do you think that there are bubbles, inflation in other things? I mean, do you think that the stock market is inflated? Do you think that there are pockets of the stock market that are inflated?
Yeah, very much so. In other words, I do think that some of the multiples are crazy, that some of the investments are just out of this world. I mean, as far as any manageable ratio. So versus, at Icahn Enterprises, where we've been doing this for years and years, I always keep a hedge on, but activism still works as a paradigm. It's the best one. But you do have your ups and downs in that too. But happily, since, I can't talk about this quarter yet, but for the first 3 quarters of 21, our net asset value of IEP went up $1.8 billion. So we're happy about that. So and that's with having a lot of hedges on. So
right.
What happened was that the activism came to fruition on a number of companies, and in those 3 quarters.
Right. Well,
a number of. Yeah.
We are celebrating 15 years here on the show, Carl, but you've been at this activism business for a long, long time, and you're still at it. How many years have you been doing this? Because I asked you this because you've said that you think that you might be the last activist out there. You have the luxury of having permanent capital, your own capital, to do these long-term battles, and it's going to get more difficult. And Gary Gensler, the chairman of the SEC, is looking to shorten the 13D filing window. And what would that do?
Yeah, look, I really think that could be one of the last nails in the coffin. I think the SEC is doing a lot of good things, and I think Gary Gensler is doing good things. I think there's a lot of things in Wall Street that should be cleaned up. There's a lot of abuses. There's no question about it. So in that sense, I agree with him. But I think activism is very important break on corporate America. I really don't think there's corporate democracy. I think you have corporate feudalism. I have said that for years. So and it's very hard to get across that moat, and charge in the feudalistic society that you have. So it makes no sense to make it tougher and tougher for the activism to work. And with me, we take big positions, we make tender offers, we have permanent capital, but what you are is killing the smaller activists who, if you don't give him time to accumulate a stock position, up to 10%, up to 15%, even up to 5%, if you don't give him, then why there's no incentive to spend a great deal of money that you have to spend to do a proxy fight to try to get these guys to account. And believe me, I've seen it over and over and over firsthand how many of our companies are just terribly run. And that's why we make so much money. Over the years, we clean up these companies, and it's just amazing the abuses that corporate America places on the shareholders in many companies. There are many very good companies and many very good CEOs, but then there are very many bad ones. And I think it's sort of crazy to throw the baby out with the bathwater. I don't get involved in politics, but I may get involved in this one to write. Last time that we're going to do this, I wrote an editorial. I'll probably write another one. But I think that if you don't have activism, you don't have accountability. The Business Roundtable is a huge lobby, ironically paid for by the shareholders that are getting abused by them. So, I could go on and on with this. It's silly to go on and on. I mean, we do activism, and there's so many companies. I mean, that's why we made $1 billion. The net asset value went up $1.8 billion, even though I was hedged on the technology stocks, which are working out a little better today, I guess. But it really is a problem, and part of that is that we're not productive. We are not really productive. That's one of the reasons you have inflation. And one of the reasons are we're not well run, the companies. And I can attest to it because I've been there for so many years. Okay, well, I'll just leave it at that. There's no point in talking about it anymore.
Carl, it's Karen Finerman. Thanks for not just being here today, but for being here over the years. And, I've followed you as an activist from when I was a wee child. And you're actually one of, I followed what you do for so long, and I found it fascinating. I love your letters. They're entertaining. But I'm wondering, given how high the markets are, even with this sell-off, and how difficult it's getting for activists, do you still find that there's places, I know you have a couple that you're working on now, but do you still find there are opportunities for you?
Yeah, you find them because the bad corporate management has no time limits. There are plenty of them that are bad. We're working on one now, Southwest Energy, which is a quintessential example of what I consider to be bad management, almost abusive management. And we're going after them. But I can afford to wait. We can afford to do a tender offer, and but it's really. I won't say criminal because I guess it's legal what they've done. But I mean, they went out and. I say to avoid somebody challenging the great spending. I mean, the reg agencies in California and Arizona, have challenged them quite a bit. Their SG&A has gone up 37% the last 4 years, and yet they went out and bought a company just recently. The company is a pipeline, Questar. And the old saying, fools run in where angels fear to tread. So in that area, the most that anybody would ever pay for this from the pipeline was, I think it was Buffett at $1.7 billion, where there were synergies. There are no synergies here, and they just paid $2 billion. And I think they did it, and we've said it publicly. They did it so they could place stock in the companies that the stock was down. I think the utility is a bargain. Obviously, I just made it. We made a tender at 75. The stock was 67, but it's there. It's just a terribly run company, and yet there's so many barriers to entrance and so many barriers they're putting up. But I'm just using that as an example because maybe it's unfair to just pick them out. I go on these boards. I don't go on the boards. I have people on the boards, and it's just unbelievably abusive. And the lobby they have just, it's got a lot of power, and hey, Karen, I've been with you, and I remember we've been talking about this since you've been on these shows, and I think you agree with me to some extent, and so I keep doing it because I don't have very much else to do. I'm getting older, and I play a little tennis, and that's pretty tough. So and I enjoy doing it. But if you ask me, there are always examples for this that you can buy and pick out. Now, look, I'll say this: when secular changes come, markets fall apart, so you have to have the staying power. That's what I think Melissa just mentioned, where you can't have a capital that could be called away from you, in 2 years or 1 year. Sometimes you have to wait 3 or 4 years. At Motorola, it took 3 or 4 years. It worked out tremendously well, but it took a great deal of time. Reynolds Tobacco, going way back, took 4 or 5 years, but you made 10 times your money on the stock there. So it's just a very fascinating business, and it's sad to see that I think the last nails in the coffin of activism are coming on. But what can you do? I mean, I honestly, I'm not here to criticize the SEC against them because I think they've done some real good things. But this one, I think they're missing completely.
Right. Carl, it is always a pleasure to speak with you. We wish you many, many, many more years in the activism business. And we hope you'll come back on the show.
Okay. Good.
All right. Be well. Carl Icahn, the legendary Carl Icahn. Tim, we've had him on many times. Ironic, considering he's long patient money and we are called fast money, but he's always giving us pearls of wisdom.
Well, he's an absolute legend on the street, and you talk about the patience. He's basically waiting for the fat pitch for a guy, by the way, that hasn't lost any miles an hour on the fastball. And so the lesson really is that he takes a position and he's there. And think about the energy sector. Again, Carl's one of the great cyclical investors of all time. And some of the big positions we started seeing him put on as we got into the middle part of last year when, yes, energy was having a resurgence. But again, speaking of poorly run companies, the energy sector is full of it. And this is a case where we talk about this on this show all the time, that these companies now actually have to run themselves for shareholders. They don't have the pools of capital and the growth at all costs. So it's been a treat. It's been a privilege to listen to Carl and be at the table and even be around a couple of his big battles and have a couple of his opponents on and get their side of the story. But he's somebody that's done it for a long time, and activism does play a role in not only an inefficient market, but in a market that needs governance from corporate America.